So this week, single-handedly, we have had the most fear-mongering post all over Twitter, all over Instagram, all over TikTok about the world's going to end. We're now in $40 trillion debt instead of $39 trillion debt. Bonds are through the roof. Inflation is going to keep going up because oil prices are up. And now the yen is selling U.S. debt. And now that's it. That's it. Recession. Time to sell everything. And in this video here, I'm going to lay out some stuff on a whiteboard, draw some stuff out. I have some images I want to show you guys. I have some Twitter posts I want to show you guys. And I have some explanations here with Google that I want to show you guys. That I don't think that that's the case. I think there's lots of things that's up in the air right now. And it's a very interesting market to be invested in right now. So it all stems from understanding what's really going on right now. Okay, so to explain, if you go on Twitter, you go on Instagram, every single post you're going to find is, oh my gosh, the Japanese yen holds US debt, okay? They are now selling that for their currency, and from the outside looking in, everyone's like, oh my gosh, they're selling US bonds, that's it for us, and that makes zero sense at all. They are selling that because they need to, because oil prices are high. And they need cash. It's that simple. So it all stems from high oil prices, okay? This is what's going on right now in the world as we know it. It's high oil prices, okay, lead to sticky core inflation, right? Core inflation is higher, right? Now this spikes 10-year bond yields, 30-year bond yields with the United States, and this makes it more expensive to borrow money, okay? So any of these Mag 7 companies actually borrowing debt and borrowing money to build out their AI infrastructure, this is causing it to spike. This is more expensive on their end. Now this leads to tech stock valuation gravity. So what this pretty much is just saying is, with all this stuff going on, Mag 7 can't borrow as much money because now they're paying more interest on that money, and that's what everyone's freaking out about right now. So this is kind of what we have going on right now, and I'm just gonna draw it out a little bit because it's gonna draw it out a little bit easier. So we have NVIDIA here, we have all these great companies, and we have coming into next week, and this week was we had some green days for some companies, we had some red days. It was really just a lot of panic, uncertainty. Some stocks were green on the day, some stocks were red then the next day. There's a lot of uncertainty in the market, and you really need to sit down and look at what's going through everything right now with a lens, and it takes a lot of research. I've sat down 2 days ago and I've done probably 10-15 hours of research, going through everything and realizing what is actually going on under the core of everything right now. So let's start it off with oil, okay? Oil prices alone. So if we draw out oil, okay, these alone is the biggest issue of everything here. This is the biggest issue of everything, is high oil prices, okay? And high oil prices causes higher inflation. And you can argue the fact that every time in history that oil has been extended, above 90 some dollars a barrel, this long, this and that, it has led to a recession, or it has led to a significant market dip. That is true. That is true, but that does not mean that that's going to happen next month. That's not going to mean that's going to happen next week, right? This is something to worry about months on end, or months in the future, or even a year or two in the future. Okay, so that's what's happening, and that's the main reason for all of this stuff. That's the main reason for the yen having to sell US bonds. And let's talk about the bond market and the AI market. So oil is up right now. It's very, very expensive, okay? And that's just a side issue. That's issue number one, okay? That is literally, that alone, oil being up, is issue number one, okay? The second thing is that the US is in $40 trillion debt, right? We are now in $40 trillion debt. What is their plan to get out of this debt? Tariffs, which Trump is doing, and something that they've been talking about for the last couple months, which is grow their way out of this debt. It is to grow their way out of this debt. Now, what exactly does that mean? That means more money flooding into the United States via AI infrastructure. That is the only way they're doing it. And to make back money in the United States, and that's how their plan is to grow their way out of debt. That is the best way, that is the best chance they even have, right? They want to grow their way out of this debt. So here's the problem with that is you have oil, which is expensive, okay? That is, one side of things. I don't know why I can't move up. There we go. Oil expensive, which is one side of things. And then you have the Mag 7, okay, borrowing money, okay? So the Mag 7, can't draw for anything. Mag 7, all these big companies, they're borrowing money, okay? So they're out here borrowing money, okay? They're borrowing all this money, and what that is doing is that is raising bonds, okay? That is raising the price, that is raising the price of them to borrow debt, okay? Because all of these companies are doing it, they're pulling so much money out of these that the bonds are absolutely skyrocketing. The price to borrow debt is absolutely outrageous, that if it goes on for much further, these Mag 7 companies are destroyed because they cannot keep borrowing money at this rate. They can't keep doing it if the bonds keep skyrocketing, and it gets expensive on their end to borrow all of this money from the bonds. They're going to have to stop. They're going to have to stop the AI infrastructure. The AI infrastructure stopping means all of these companies that are tied to all of this build out absolutely collapses. And what does that mean? A massive sell-off in the stock market. The U.S.'s plan to have AI infrastructure build their way and grow their way out of debt pretty much goes away, and it's not coming back anytime soon. And now they're even in a worse position. So I like to consider this as a double-edged sword, because why is bonds going up? Bonds are going up because of oil prices, but it's also going up because Mag 7 is borrowing so much money. So it's a double-edged sword. So this image really, I really like this image. So AI company borrows billions of dollars, okay? This, number 2, is capital demand pushes yields higher, okay? Because so much people is borrowing money. All these big companies are borrowing money. The capital demand pushes yields higher. The price to borrow more money is going higher because everyone's trying to borrow money right now. Higher yields make borrowing money costlier, right? So now you have higher interest rates for these specific companies. And at some point, they're not going to be able to keep up, right? So then this leads into number 4 is AI growth becomes harder and harder to fund. And at some point, there is a breaking point where if any of these companies come out and say, hey, these yields are too expensive, we can't keep borrowing money at this rate, we're going to have to just put a halt on things. That is the worst thing that can happen right now. And that is the worst thing for the United States, and they know that. They cannot let this happen, and they will do everything in their power to make sure that doesn't happen. And I don't know about you guys, but anytime the U.S. Capitol wants to get their way, they will get their way. And that is why I'm investing on their side through this, because I have a lot of trust in them, specifically because they know that they cannot let this go. So that's essentially what's going on under the hood right now, okay? And I'll get into that stuff for a second. But the Mag 7 is in a situation where it's borrowing money to build out AI infrastructure, okay? It's borrowing money to build out AI infrastructure, right? That is Nebius, that is CoreWeave, there's memory chips, we have Micron, we have SK Hynix, and then you get into the silicon providers, you have Broadcom, Marvell, once these load, Broadcom, Marvell, you have Photonics, all of these companies, and then eventually it trickles down into energy companies that power these as well. So you have a lot of stuff right here, okay? And the second any of these Mag 7 companies come out and say, hey, we can't keep borrowing money, this goes down. So that is essentially the fear that's in the market. So everything that I explained, that is the reason everyone is fearful right now, is the $40 trillion debt, which again, we've been climbing from 36 trillion, 37 trillion, 38 trillion. No one cares. No, everyone knows they're just going to print money into infinity. 39 trillion and then 40 trillion. Well, now it's 40 trillion. Now it's a big new number, right? 40 trillion sounds so much larger than 39 trillion. So now it is mass panic on TikTok, Instagram, Twitter. If you are a new trader, you're going to get blindsided by all of these things. And everyone likes to hype this up because when you post on Twitter, post like this, and I'll get into this in a second. When you post like stuff like this, it gets massive engagement. These get massive engagement, okay? 2.6 thousand reposts, 7.7 thousand likes, 241 comments. Like, these get massive engagements when you fearmonger. When you write a big post explaining what's happening, no one really cares. So that is why you see stuff like this. That's why this stuff actually exists, and that's why all these fearful posts come out. And everyone's freaking out about that, and investors are scared because it's in a position where it's like, okay, well, these bonds need to come down. So here's my theory. That is what's going on right now, which is a fact. It's not a theory. That is a fact. That is what's going on right now. Bonds are expensive, and oil prices really have not came down at all. If we just go to, let me go to, I thought I had oil here. Oil prices have been coming back up here since August. At the end of July, we have kind of dumped hard, but we have been slowly climbing back up. Bonds have been reaching record numbers since 2006 and 2007, and that's essentially what's happening right now, right? And the U.S. knows this. They're not stupid, right? And they understand, okay, we're in a position where we need to get this down right now. We need to get bonds down ASAP, right? And we need to continue to let these companies, these Mag 7 companies, spend their money and keep building out this AI infrastructure, because the second they don't, this is going to put a halt to all of this stuff, and it's going to cause mass panic, mass deleverage. Everyone's going to be pulling positions out. Hedge funds are going to be pulling their positions out of this market, and it's going to be disastrous. And they know that. And they understand that they cannot go that path. So what is going on right now? Well, the U.S. and Iran is still fighting over this oil, right? And oil is going through. That's something that people don't realize, is oil is actually going through. I think they're getting like 8 to 9 million barrels a day is going through, but that isn't a normal number. And that's why you see it spiked, but it's not these record numbers. It's not 100, almost $120 a barrel. It's not 115 a barrel. It's up, but it's in the 80s. It's not over 100. And that is why, because some oil is going through, but not really all of it at all. And that is why it's spiked right now. So that's that, okay? Now, what do we have next here? We have a meeting on Monday, okay? And throughout this week, this is what's been going on with this AI stuff. And I'll get into who reports earnings. I want to talk about crypto as well. But we have a meeting on Monday, and they understand that they need to address this fast, okay? Oil's up, okay? And this makes bonds go up. If I can draw it out here. Oh man, this is ugly. All right, so oil's up. This makes bonds go up, right? And they understand, AI that is pretty much relying on this right here. They cannot continue to borrow from these bonds when it keeps going up, 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 up. Eventually, something's going to crack. The U.S. knows this, and this is the thing that people don't realize. People see this as, okay, bonds are going up. AI needs bonds to kind of come down to keep borrowing this money. So, we're still in this trade war. Bonds are going to continue going up, so might as well just kind of sell everything because this is a bad time to be in the market. I don't buy that. And the reason I don't buy that is because, first of all, my entire portfolio is still all in AI. AI stocks. I put my money where my mouth is. If I'm wrong, I'm wrong. Okay? But I want to make that clear right now, is I am still heavily bullish on this stuff. And the reason for that is because for the United States, AI infrastructure and AI growth and the money they're making from AI is their only way out of this $40 trillion debt. That's their only way to combat this, and that's the only way to keep inflation rates lower, make it better as a country, instead of spiraling into raising interest rates, bonds going through the roof, AI starts collapsing, and it's just like, right there, you just have a failed economy. You're crumbling the economy. You're destroying the country, literally destroying the country piece by piece. They understand it, and it all stems from this, right? It all stems from this. And here's the thing. They can't come out and directly say oh, somehow we're just going to just lower bonds and now we're good. You might think, okay, well, it's the United States, or they can just kind of do anything they want. They unfortunately kind of can't in this position. So what are they going to do? Well, let's first talk about the fear-mongering post. Japan, I'll read this to you guys. So the bond market just broke. Again, that's a fear-mongering post. Japan dumps $26 billion in treasuries while America is buying back its own bonds. Today, the U.S. Treasury admitted the long end of the bond market is broken. Nobody wanted the 10-year, 20-year, 30-year debt. 30-year yield just slammed into its highest level since 2007, peaking near 5.33%. So what did they do? They announced that they're at least doubling their liquidity buybacks. So this is something to try and keep bonds from going really, really high. Normally it's $2 billion. They doubled it to $4 billion, but people understand that is just a water drop in the $40 trillion of debt we're in. So for a day when that came out, it's like bonds kind of went down a little bit and then it's just straight back up because people understand that. So if we keep reading here, it says they're literally borrowing short-term money to buy back their own long-term debt. Classic desperation move. Bond prices spiked, yields crashed 9 to 10, and futures ripped higher the second the news dropped. And this is true. Meanwhile, Japan, still the number one foreign holder of the U.S. Treasuries, is dumping them to fund currency interventions. The BOJ and finance ministers threatened of bold actions to save the yen. You can kind of keep reading through this. I'm trying to find the important parts. That follows their massive joint U.S.-Japan yen buying intervention in late July that burned tens of billions of dollars trying to stop the yen from hitting 40-year lows near 164. The yen has already given back more than half of those gains and is back above 159. When the biggest foreign buyer is selling treasuries to defend its own currency and the U.S. government is forced to step in and buy its own unwanted long bonds, this isn't market support, it's the system flashing red. So, pretty much, the yen is selling the U.S. bonds and the U.S. is buying them back, and it's like that's it. That's end of the country, end of the, that's the start of a recession, this and that. But it's not essentially working like that. Okay, what's essentially happening is this stuff is something everyone's talking about right now, and I don't know why. It's ever since $40 trillion in debt came out and they crossed that number, it is now Japan selling. This happened, guys, back in June. This happened back in June. This is just old and recycled post. Everyone's just flipping. I saw a reel today on Instagram. Someone with full-on confidence just sitting there like this, talking to the phone, explaining that, Japan just did this. This means this. This means this. I'm like, this happened 2.5 months ago. This has been happening. It's just old and recycled stuff. Okay? And the July data for, a month after does not come out until September 16th. So this is what people don't realize, is they're only selling bonds because this is a structured thing anytime oil goes up. Any single time oil goes up, US or the Japan sells US bonds. It's just a normal thing. Anytime oil goes up. So going back to our point, this all stems from this. This all stems from this. Oil causes some issues, right? Causes a lot of issues. We talked about Japan, stuff like that. Now, eventually, this is going to cause bonds to go up. The only reason bonds is really, really going up, though, isn't just because of oil. It's because of AI borrowing so much money. AI is borrowing so much money. Oil was already up, so that causes inflation to go up, and bonds are now up. AI, if they borrow more money, the bonds keeps going up. This is the ladder. If they borrow even more money, bonds keep going up. But they can't stop borrowing money, because the second they stop borrowing money, that is the US's ticket to build back this economy, and now it's over. All these people are going to deleverage, everyone's getting out, and none of these AI companies can grow without borrowing this money. So we're in a loop. This image is literally ties up everything, that we're in a loop. The growth America needs helps create the rates holding it back. It's literally this loop. It's this loop going back and forth. It's AI cannot help itself because it's trying to borrow money, but it raises bonds, and it's a double-edged sword. Anytime they try to borrow money, they're like stabbing themselves. They try to borrow money, they're stabbing themselves. They're trying to borrow money. They keep on sapping themselves. They need something to come in and break that cycle where they can freely borrow cash. And that is where U.S. has to come in and really try to save everything. We're in a pinnacle moment. We're in a very important moment. So the main thing here is, if we look at oil prices are still elevated, and these stocks, any of these stocks fell pretty hard last week, especially the Mag 7s, and any of these companies, we'll look at Nebius. This is a massive provider in the AI space. We opened up this week, Monday, right here, and we fell. We've dumped 21% this week. And it's really like that for any of these companies here. And that is the fear that's out in the market right now. That is, again, the fear. The bonds are all-time highs, this and that. Now, here's what I think. If we go and look, what exact one did I want to show next? We'll talk about the U.S.'s plan. U.S.'s plan is this. They're going to have a meeting, okay? If you type in economic D-Day, I can't type for anything. So President Donald Trump announces crushing economic D-Day campaign against Iran, threatening unprecedented economic warfare and isolation, this and that. What is their plan? Well, their plan is anyone that buys Iranian oil will be cut off from United States trade. Okay? Anyone who buys Iranian oil will be cut off from the United States trade. Now, you might be thinking, okay, what exactly does that mean? So, here's what essentially this means. This is China, for example. China buys 80% of Iranian oil, okay? Iran is really only making their money from China through oil because, again, China's buying up 80% of their oil supply, okay? Now, here's an example of how much China does in trade with these two countries. With the United States, we do almost $500 billion. In Iran, they only do $41 billion. So you're talking about a 12 times difference. Now, what United States is going to do Monday is there's a meeting, and after the market closes, and they're going to announce this plan. Okay, they're going to announce this plan, and they're going to say, "Hey, listen, here's our plan. Here's what we're going to be doing." They're threatening China that, hey, if you don't comply and if you don't stop buying oil from them, we will cut off trade to you. We will cut off a lot of their banking that is making money from this oil. It is underlying with the U.S. dollar. So U.S. kind of has China by the balls. And U.S. is going to say, hey, we're going to pretty much, cut you guys off. You're not going to be able to do transactions, this and that. Now, there has been a situation before that this has happened, and China was, understands that instead of entering a trade war at mass scale, they're just like, all right, we'll stop buying from Iran. We'll start buying from Saudi Arabia or whatever. And if that happens, this is what happens. China cooperates, okay? China shifts oil suppliers, okay? So geopolitical pressure eases and oil prices move lower. Now, why does it move lower? Well, this is what happens. So we're going to come out with this deal, okay? And what's essentially going to happen is if China cooperates, okay? If China cooperates, they are going to say, hey, okay, we're going to start buying oil from these other countries, this and that. And what happens? Well, Iran has all this stockpile of oil sitting at the end of, the strait that they normally sell out to China. Okay, they normally sell it to China. If the U.S. comes in and says, hey, switch, China switches, Iran has all this oil. They're losing money daily by keeping all of these ships with all of this oil sitting in the strait. That forces them to sell this oil out for pretty much pennies on the dollar to all of these, foreign or all these different countries. And when they do that, that releases all of this oil supply out to the economy, and that lowers oil price because now there's more oil flowing. So that is US's plan to do this, okay? Now, that would lower oil prices. It would absolutely dump. And with oil not being elevated, that will actually bring the bonds lower so that AI companies can keep borrowing money at a cheaper price, keep building out AI infrastructure, and the US can keep growing their economy. That is the whole purpose of this. Now, what if China does not cooperate? And China says, hey, actually, we're not going to do this, this and that, and whatever, doesn't cooperate. Do you think the U.S. isn't that stupid? They understand their backs are against the wall right now, and they understand, okay, look, if we don't do anything about this, bonds are just going to keep going higher, oil is going to pretty much keep going higher, and our ticket to build back this debt, which is through AI powering, is going to collapse, and that is it. Like, everything's going to collapse slowly and slowly and slowly. They understand they cannot do that. So their new plan is to incorporate this D-Day plan. So instead of doing Epic Fury, I think Trump called it, it's now called Economic D-Day. Okay, so the strategy is President Trump announced the initiative on Truth Social, describing it as an effort to impose economic warfare and isolation on an unprecedented scale. These are all fear tactics that Trump uses, okay? According to the administration, the ultimate goal is to cut off the financial lifelessness, I can't even speak, keeping Tehran's proxy network alive in the Middle East and prevent Iran from developing nuclear weapons, this and that. It's always nuclear weapons. It has nothing to do with nuclear weapons. It's all about money and monetary gain. It has nothing to do with nuclear weapons. Nuclear weapons in Iran has been here since the 1900s, and it's always about oil and currency. That's what has always been, and trade. So China, right here, China remains Iran's primary economic lifeline, purchasing roughly 90% of Iranian oil, while Besant, which is, the speaker for the United States, declined to state publicly how Washington will penalize Beijing. He noted that private discussions are ongoing. So this is the main thing, is when China pushes back, because realistically there's a 50% chance. There's lots of times before that, instead of China pushing back, China isn't in the best place either, guys. China is actually max unemployment right now. The economy isn't doing great right now in China. For them to push back in the United States and cause some of that stuff, they can't really take much. So can't we, right? But China isn't in like this best place to just, go into a full-on trade war with the United States. They're not really in that space to do so, right? So they know that if they say, hey, we're not going to go through with this, they have a plan, but they will not release it until, they'll see if China goes through with it. The United States isn't dumb. So what I'm betting on is, I still have my AI stocks. Instead of selling all of these because of these fear headlines right now and all of this stuff, I'm not selling it right now. I'm not selling it right now because I think that the United States understands this. I think that, hey, are we going to get a big dip in the S&P 500? Are we going to get a massive dip at some point? Yes, that could happen 5-6 months from now. That could happen a year from now. Do I think it's going to happen in the next 2 weeks? I don't. And I think the U.S., with this meeting Monday, is going to come out with a plan that is going to force China to switch. And if that happens, that will be a massive, absolute massive win. And if they don't switch, the U.S. admitted that they have 140 million barrels at sea ready to deploy. So this is what happens. If China comes out and says, actually, we're not going to do that, instead of that causing insane fear and like, oh my, now we're really screwed, this and that, the U.S. is already prepared for this. They already have 140 million barrels sitting at sea. They're going to disperse it. So that is still going to bring oil down a little bit. That isn't going to spike oil a crazy amount. They're holding this seized Iranian oil, and they're going to ship it out, and that puts more oil into the economy. The U.S. can also mention, we have so much oil reserves in the United States that they can also mention that, hey, we're going to start putting this out. That is going to bring the cost of oil down again. They are not stupid. They have plans for when China does not cooperate. And that's essentially what I'm betting on. I'm betting on the United States having a plan because, Trump's not stupid. He understands this stuff. And That's pretty much it. That is it. You know, when you look at all these posts and everyone's like, oh, this is happening, this is the end of the world, it's really not. The second oil comes down, all of this from head to toe is fixed. The second oil starts coming down. All you need, again, is oil to come down a little bit, and these AI stocks are absolutely mooning again. That is all you need. And I'm not looking to be in this AI trade for a very long time. I'm in a specific stock that I'm looking to see returns on, slightly quickly, rather than holding it for months and months and months on end. I'm looking that I think all these AI companies, whether you look at Nebius, CoreWeave, Broadcom, Marvell, AOI, any of these companies, I think that we can easily see another leg up this year. And from there, do I know it's going to happen? No one knows what's going to happen. We don't know what the economy is going to look like in September. We don't know if we're going to raise interest rates, keep interest rates the same. We don't know, right? We can only judge it week by week at this rate. And that's why I'm making this video, I'm putting it out Sunday, giving my outlook on what I think is going to happen. I think we are going to see either Trump taco, which, he just comes out again and says, oh, we won the war, this and that. And, oil was flowing again and this and that. And, things just look bullish. That's what's been, that's actually what led price to all of these companies to just keep ripping while we're in the middle of a trade war with Iran. That is essentially what led to all these prices keep ripping. And we could get something like that. We can have, there's a lot of things that can happen right now. But you have to understand, for the United States to just not do anything, let oil keep rising during this meeting, let bonds keep rising, put pressure on all of these companies from spending AI, that is literally going to get us out of this $40 trillion debt and bring us back as a country. For them to just not really care about it and just keep letting it go, you're a fool to think that's going to happen. It is stupid to think that is going to happen. The United States understands the position that they are in. They understand that they need to fix this fast, and they need to come with a compelling headline. That is the main thing. The main thing on their mind is we need a compelling headline that's going to drive consumer bullishness into, okay, we're now risk on. And Wall Street needs to see that, right? Wall Street needs to see that. They don't move on speculation. They move on actual cold hard facts. So again, if something like, China agrees and they start buying, oil from Saudi Arabia, and now Iran is forced to sell out all this oil, that puts oil into the economy, that brings down oil prices, that brings down bonds prices, then all these companies can continue borrowing money to put into these companies down here, all of these AI build-out companies, and then so they can keep ripping. So you guys understand how it is a massive chain ladder. That is the hardest part in explaining it to anyone, especially this YouTube video is really, really hard to explain it because you can't, every single piece has a different moving part. Every single piece has a different moving part. It's very hard to explain. The core thesis is bond prices need to come down and oil needs to come down. Now, let's talk about midterms. People think, okay, it's midterms right now. Historically, September and October have done bad, and that's just another reason to be bearish right now. So I have Google explain it very well right now. So just so I can read it to you guys. So midterm election year means Americans are voting for Congress, okay, not the president. Okay, the market historically chops or drops in September and October because Wall Street hates political uncertainty. Wall Street, hedge funds, institutions, they will not invest on uncertainty. Okay, big funds don't know which party will control tax laws, spending, or trade policy, so they temporarily pull cash out of everything, out of risky stocks, and wait on the sidelines until something happens. Makes sense. This time is completely different though, because the market isn't fighting for a normal domestic political debate. What it is doing is it is fighting for high bond yields driven by $94 a barrel of oil. Everything in Congress is strictly fighting to bring bonds down. So instead of midterms in this sketchy September and October being strictly on political views, this and that, this side's going to do this side's going to do that, both sides are fighting to bring down bonds and oil. That is the main thing. That happens, that gets rid of the entire midterm scare, pretty much. So tomorrow Tomorrow's single White House meeting can completely hijack the historic midterm trend because economic policy can override political calendars. The bearish midterm scenario. If the meeting fails, okay, if the United States screws up this speech and stuff like that, which they know exactly what they're going to do, I don't think they're going to be, just screwing this up. They understand that they need to come out very bullish. They need to put the point across of, hey, we're going to do this. This is going to bring oil down because of this. We're going to do this. We're going to do this. If this fails, we're going to do this. They understand that they need to come out like this. They are not stupid. They understand that. But if the U.S. screws up, tomorrow's sanctions, oil stays $94 a barrel, inflation remains sticky, and bond yields stay near multi-year highs. This gives big institution funds a perfect excuse to sit on their hands, not put any money in any of these stocks, because they see this. They see if the U.S. comes out and say, hey guys, our backs really are against the wall. We don't really know what we're going to do. Oil is going to still be higher. We're going to keep holding it until Iran breaks, and yeah, it might get a little tough, and yeah, that's it. If they say that, everything's coming down. Institutions are not keeping their money out there. That's going to scare retail. Retail is going to withdraw all of their money. These AI infrastructure companies, Google, Microsoft, they can't keep borrowing all this money to build out AI. And them building out AI is what's going to bring money into the economy to lower that $40 trillion debt. If they can't do that, can't keep borrowing from the yields, that gives a shit too. So now the economy, the country as we know it, is in a devastating point right now. So, with that being said, they understand this. They are not stupid. They understand this and understand that they need something that they're going to win both sides. And that is why I think coming out with this D-Day plan and stuff like that, where, okay, China agrees, great. If China doesn't agree, great. We have Iranian seized oil. United States is actually actively, they're moving oil throughout the night through these different canals. I don't know if you guys knew that. It is a very interesting story. It's not really hit the paper and been confirmed yet. And it is a very interesting story because, again, they're going to, the United States isn't stupid. They're going to be doing anything in their power to get this oil out and bring down these costs. The main thing, again, is most people will be like, what if they don't? What if they don't? What if they don't? You guys don't understand. They have to. The United States has to. If they didn't care about the AI build out and they did not care about it, and they had bigger plans for something else that didn't require bonds to come down or oil to come down, they would not care right now. They wouldn't care, and that would be a realistic bearish view on this and a reason to be scared. But that is not the case. That is not the case at all. They need this AI infrastructure to work. They need this to work. They have to have this to work. And this is their only lifeline to build back the $40 trillion of debt. That is why they're going to do everything in their power to bring down oil and bring down bonds as of right now. Am I saying that, hey, in this AI build out, there's going to be a dip at some point? There is going to be. And that specifically in the AI build out is when supply meets demand. Right now, it's 15-1 right now. There is so much demand and there's not enough supply. When that gap starts to close, that is when you'll see these AI infrastructure stocks start to pull back. We are not near there yet. We're in a bump in the road that, hey, bonds are expensive and oil is expensive. United States needs to bring this stuff down to keep AI to bring down their $40 trillion in debt. If they don't, the economy is cooked. They understand that. They're not stupid. So they're going to do everything in their power to do that. And you need to look under the headlines because these headlines are going to come out as scary. Trump said, we're going to use our military to bring down bonds. That comes out so scary. Everyone's going to be saying, oh my God, we're getting another war, this and that. That means nothing like that. Trump saying he's going to use military to bring down bonds is just a fear tactic of, hey, if they don't cooperate, we're going to have we're going to be backed by our military to pull out this oil to bring down bonds. It's just, it's what you expect to happen anyways. And, him saying that is fearful. It's made to be fearful for other countries. But as an investor, you see that and you get scared. That's why it's important to sit down and read through everything and understand what's actually going on. So, the bullish reversal scenario, and this is what I think is going to happen. If the meeting succeeds tomorrow, and again, you have no clue what the United States, what trick they have up their sleeve to say or do in that meeting that is going to be very important. If If the Secretary Bessent successfully executes the precision oil trap tomorrow, oil instantly crashes to the 70s, inflation fears die, and bond yields absolutely dump. In that case, this forces institutional funds to throw the traditional midterm seasonal playbook out the window, because that is their main concern right now. That is what both sides of political parties are going for. And if that goes out the window, bang, all for them. They're risk on. They will be forced to aggressively chase corporate earnings, like Nvidia on Wednesday and Marvell on Thursday, sparking a massive unseasonal tech rally weeks ahead of schedule. And this is the main thing. So the government is cornered by its own $40 trillion debt mountain, and must, I don't think you guys understand, if you're investing in AI right now, you're investing in the United States being able to bring down yields. The United States has got out of its, it's been in corners 10 million times, and it's always gotten out of it. So you're betting on, if you're bearish, you're betting on the United States not being able to figure this out. If you're bullish, you're betting on the United States being able to figure this out. They've always been able to figure this out. It's they've always got some trick up their sleeve, and that's essentially what you're investing in my opinion. You're not really essentially investing in right now. Okay, yeah, some companies are going to perform better than other companies, but essentially right now people think they're just investing in, like, oh, the S&P's at highs. At some point we're gonna, last time we were at highs, we're gonna get a crash, and now is not a good time to buy. It's like, that's what you're thinking, but you do not understand any of the thesis that's going on right now. So they must force yields lower to protect the AI economy. Okay, tomorrow's meeting is the exact policy trigger that can turn a historically bloody seasonal slump into the biggest bear squeeze of the year. Now, bear squeeze pretty much means everyone's bearish, and bullish news comes out, which is what I think is going to happen, and you might not see it instantly, like in one day this week. This might be something that plays out in like 2 to 3 weeks, but when everyone's bearish and fundamental bullish news comes out and institutions actually start buying, because they're reading the same thing I'm doing right now. They're doing the same exact thing I'm doing right now. But most retail guys, they're sitting over here reading this, like, oh my gosh, this is bearish, sell. This is bearish, get out of here. This is bearish, get out of here. And it's just like, that's what retailers do. That's why they're 90% of the time they are wrong. And when everyone's bearish and everyone has short or put options on these stocks and stuff like that, and fundamental bullish news comes up that literally re-rates the stock, they are forced to sell, and they're forced to give to a buyer, and that just drives up the price, like literally drives up the price, because everyone's bearish. It's the same thing that happened with GameStop in 2020, except that was an insane example, but essentially the same thing happens. Retail is always wrong. When retail is mass bearish, it's usually bullish. And the same thing with Bitcoin, I feel right now. That's why I want to talk about this, is if we go and look at Bitcoin had a massive pump right now, right? Massive pump. Do I think this is the bottom? No one essentially knows. No one realistically knows. But I will say this one thing. This pumped off of a couple things. In 1 week, last week, we had Trump talk about crypto. We had Trump meet with a bunch of crypto people, say a bunch of crypto stuff, pretty much. Shout out all these coins, and then you had all this stuff, and you had the passing the Crypto Clarity Act that he was confirming he was going to do, this and that. Bullish for crypto. In 1 week, it was just a switch. The thing, though, is that a lot of people was also loading up on this and buying this, because it was all posted on Twitter of like, this is the end of the world, load up on Bitcoin, because this is going to hedge against the economy collapsing. That's pretty much the whole thing of Bitcoin. And that was the whole narrative, and it pumped. I think in a flick of a switch, these bonds are outrageous, oil's expensive. United States understands that they are in a corner. They need something now to bring bonds lower, fix the oil prices, let AI keep expanding so they can pay back their debt, and they are good. Bitcoin is something that they cannot pay back their debt with, but AI infrastructure in the United States as an ecosystem can. It brings growth to the country. So, in my opinion, I think a lot of people get over their heads and think that this is the end of the country right now. This is it. Bonds are expensive. Last time we had this, recession. Oil expensive. Last time we had this, recession. It's like, okay, load up on Bitcoin. And all this changed in 1 week. Nothing fundamentally changed with AI build out. Nothing fundamentally changed. It will change if they don't fix the bond issue. And again, I'm betting on the United States fixing that issue, at least in the short term, right? We all know in the long term, inflation will always keep going up. Money will always still be, getting printed. It's existed for the last, how many years with the United States. We all know this, but I'm talking in the short term right now. And I think that people kind of got over their heads. I think it is a very well chance that the United States fixes this bond issue and Bitcoin starts to dump. Why would Bitcoin start to dump? Bitcoin is a safe haven asset, just like gold. Okay, when it's uncertainty, which it was uncertainty, but after you dig deep and look into this stuff, in my opinion, I don't think it's too much uncertain. I truly believe the United States will bring down bonds and bring down oil one way or another. They always have a trick up their sleeve, and that will bring down things like Bitcoin, which is a safe haven asset. That will bring things down because now people are going risk on because the issue's fixed, bond yields are coming down. People's going to realize, wait, nothing actually fundamentally switched with these AI companies. These AI companies still have loads of money going into them. And oil was coming down. They fixed, as long as the bonds are coming down, that is the main thing. Bitcoin falls and tech rips. Can these be in sync? Yes, they can be. But I personally think that's what will happen. Am I saying Bitcoin comes down and makes another low and that's confirmed and that specifically right here is going to be the bottom and then, up here is going to be the top, this and that? No one specifically knows. But I will say I am very confident that this will not, I'm telling you right now, this will not just continue just going like this. It won't. We will get a dip, right? Whether that's down to here, whether that's down to here, whether that's a new low, we will get a dip into this because I am fully confident that the United States will fix the bond issue and will bring down the oil. That is my bet. And there is one company that's kind of insulated in this right here. There's one company that's really insulated from this stuff that's in a very good position that I've shouted out to my Discord. And if you want access to it, the link is in the bio. I've already called Nebius, made over $2,000 with Nebius, made money on CoreWeave, made money on Microsoft, made $8,000 on InnoData down here when I felt as if it was very undervalued and earnings came out and popped. There's another company that has insane potential, I think, and if you want access to that and if you want to read into that and potentially make some money, that is in my Discord. Not financial advice or anything like that. You can obviously lose money as well. But let's watch this video here as well.
Midterms. That feels to me like it makes next week.
We're going to play this out.
Tom, do we think that next week is the most consequential for the direction of stocks in the next few months? You're not going to hear from NVIDIA again for a while after next Wednesday. And then I don't think people really think that anything from the Fed's going to happen in September or even October until you get to the midterms. That feels to me like it makes next week even more consequential for stocks.
I'd agree. I think it's what I'd consider a clearing event because let's take the AI story. There's been concerns about data centers and political opposition, and it's caused the trade to stall. I think Jensen Huang's going to re-inject a lot of confidence that, look, there's still this relentless demand story, and it's going to be taking place regardless. And similarly on the Fed, I do think the uncertainty builds between Warsh's appearances, and so I think this is another chance to course calibrate.
Tom, do we think that next...
So that is a video talking about it is a clearing event, and it is a clearing event. Next week is insanely important. We have like 3 red folders for consumer reports on Wednesday. We have NVIDIA reporting earnings for Wednesday. We have other tech companies reporting earnings that week. It's massive, and we have a White House meeting at the very beginning of it on Monday. It is a very, very, very important week, and it all depends on what this meeting is saying on Monday. And I'm overly bullish for it. I do think that this will end up bullish, and I don't think this is, all these tech stocks, all these companies that are getting money flowing into them right now, I don't think they all just crash right now. I don't. That's just me personally. But if we read this here, the key question is whether AI confidence comes back after a stalled trade. That's essentially what's happening right now. AI stocks have stalled because of data-centric concerns and political opposition. Jensen Huang, which is the CEO of NVIDIA, could re-inject confidence by showing that demand remains relentless. Okay? That is the main thing. Re-inject confidence. And this was posted this morning. NVIDIA already came out and said their AI server prices are reportedly set to rise 15% as soaring memory costs drives up system prices. That is a bullish AI catalyst we need. That is showing that with raising prices, the demand is, again, through the roof, that people are not pricing in. People are not pricing in this level of demand. And I see this as completely bullish. Completely bullish. And the company that I'm showing in my Discord, it is absurdly bullish on. And because they are the picks and shovels, they are the ones actually making this money. So, it's going to depend on NVIDIA, what NVIDIA talks about Wednesday as well. And yeah, that's pretty much what we have for this week. We have multiple red folders Wednesday. We have earnings Wednesday. We have earnings for some other companies this week. One of the companies I'm invested in this week. We have a massive meeting on Monday. And Monday it is after market open. So, and again, we have actually U.S. and China trade wars kind of going on right now. There is loads of stuff. There's loads of stuff, but you're investing in a fundamental thesis that is still completely intact. So much money is running into AI. And you have, the uncertainty of yields are high right now. Oil is high. What can happen right now? The second that started spiking up, bang, meeting Monday. Important meeting, this and that. Economic D-Day, Trump comes out with this. You need this right now. They are not stupid. Anytime this stuff comes out, they understand that they need to bring this down. And they will do whatever they need to do to bring it down. That is what I'm betting on. I'm betting on, obviously, the company that I'm invested in, that I showed in my Discord, that I'm completely bullish on. But I'm also investing on the side of U.S. will find a way to lower bonds and lower oil. Whether that is through unleashing its reserves, which it has at any point in time, guys. Anytime they get into a position like this, all they have to do is release their reserves. Oil comes, and they have loads of reserves. Anytime they have reserves, oil comes crashing down, bonds come crashing down, and that is bullish for tech. That is risk on for tech. They can do that. China can comply, and that will be mega bullish for that. U.S. can announce that, hey, we've actually been moving a lot more oil throughout the night that Iran doesn't know about, this and that, or we've been moving oil throughout these canals, and this is confirmed, this and that. Oil comes down. What else comes down? Bonds come down, and what is that? Bullish for tech. They have a lot of options on the table besides them just openly saying, yeah, bonds are expensive, oil is expensive, we're kind of in a tough spot, not much we can do. If you're bearish, that's what you're betting on them saying. I don't see that happening personally. So that is my bull case, and that is it. If we go and look at NVIDIA, if you're thinking about like investing in NVIDIA and stuff like that, NVIDIA earnings are very interesting. They always beat earnings. They just always do. They always beat earnings. This is something that's known, but it never rallies after earnings. And it is known for this, though. It is known for this. People know this in the stock world. It'll beat earnings like today, like this last time in February. We beat earnings and it dumps. This is NVIDIA specific. Beat earnings right here. Earnings comes out and we dump. Okay, this is a very well known thing. NVIDIA pumps before earnings, and to be honest, I think NVIDIA catches some green candles at the beginning of the week after the price raise. This is bullish for NVIDIA, and people are going to be like, oh, they might beat earnings really good this time because they actually announced that price raise. It would not surprise me if earnings or if Nvidia pumps a little bit at the beginning of the week. Now, earnings comes out. Could we break the last cycle that we've had multiple times now? Earnings comes out right here. It pops and then dumps 6%. Earnings comes out right here, dumps 10%. Earnings comes out right here. Now we had a major catalyst the day after. Oh no, this was actually a day of earnings. So it opened a whole way up here, and then we dumped another 13%. Could we break the cycle this time? We could, right? You know what I'm saying? I'm just labeling out right there, hey, the last 5 times, they always beat earnings. They just naturally dump afterwards. People are just cashing out on their, they're waiting for earnings, and after earnings comes out, that's usually what a lot of people are holding their cash for, and they just kind of sell it. That's not surprising at all, but NVIDIA is notoriously known for this. So that's NVIDIA. The company I'm in is in a very good position for this NVIDIA earnings. And yeah, that's pretty much it. That's what we have this week. It's a major week. It's a major catalyst. And hopefully me going through all of this stuff kind of helps you understand in a way of what's essentially going on. I know it's not like labeled out real clear, but it's a thing that's tied to a lot of stuff is AI spending money when bonds are low and oil isn't really high. This is fine. And that's why at the beginning of the year you saw AI trade rip. And this is their ticket to get out of debt. But as oil goes up and bonds go through the roof, the United States is stacking debt, and the AI is the only way out of it. So when the AI keeps borrowing, money against the United States to build out their AI infrastructure, they are raising bonds themselves because all these companies are borrowing billions and billions and billions of dollars, and it's raising bonds. So it's a double-edged sword. AI is stabbing itself every time it's trying to borrow. United States is not stupid. United States is not stupid. They're sitting up here and they see this and they're looking and they're like, okay, how can we lower this so this eats? How can we, what can we do about this? They're not stupid. They're sitting up here looking at the chessboard of what is going on right now, and will make a decision, whether it's artificially and whether it's short term, whether it's something that, hey, 2 weeks we can really lower oil price and lower bonds, or something that's a lot bigger scale. Either way, I see them lowering this stuff, at least for the short term. And that is my bull case on AI. That is why I'm holding my stocks in this controversial time right now. And nothing's really pointing to a recession yet. Are we on our way there? Are we on our way to S&P having a big dip and all this stuff kind of going really cheap? Of course, we always are. It's cycles. We've been really bullish this year. Do I see that happening in the next 2 weeks, a month? I don't. I don't. It's going to get choppy. September and October are known for volatility. It's going to get choppy. But I think if the U.S. can pull this off, and specifically the company I'm in, we have lots and lots of bull cases going for it. I think it's bullish. I think it's going to be bullish. I think we're going to come out hitting our price target on these stocks. And that's just what I think. And we'll take it one trade at a time, one play at a time with these stocks. And that's just an update on this week. As you guys know, if you guys are in the AI space, I guess, or even the stock space, we're moving at an insane period that the stuff I'm talking about right now is probably not even going to have a meaning by the end of the week. This stuff changes so fast, and that's why, making outlooks for the week is pretty important, because it's just like this, what I'm talking about now is, probably will not even be applied next month. You know what I mean? Or even in 2 weeks. So every single day something's changing. But at least at the time of this recording, which is Sunday at 1:30 p.m. Eastern Standard Time, this is what's going on. This is, I think, what people's missing. It's, again, the fear of bonds are expensive. Japan's selling U.S. debt. It's like, it's recession time. It's recession time. It's like, you guys don't understand. It's because oil is expensive. The U.S. in their back pocket can release oil reserves, start releasing oil reserves. The U.S. in their back pocket can pressure China into, switching where it gets its oil from. And that puts more oil into the economy. The U.S. also is not stupid. They have canals that they are sending out oil, and that's why it's keeping it lower, right? And they're in a place where they understand if they can do this, bonds come down. Bonds come down, and who knows what else tricks they have up their sleeve. They said they're doing $4 billion bond buybacks right now. They said it's probably going to raise. If that raises to like 10 billion or something like that, you will see bonds come down. And yeah, that's what I'm betting on right now. I think there's loads of negativity and loads of bearishness in the space right now. And in my opinion, I think retail is usually wrong. And when you kind of strip away all of the stuff and you just look at what's happening, it's like, okay, this is what needs to happen. Oil needs to come down and bonds need to come down. Is U.S. going to do this? Well, AI is pretty much the lifeline of U.S. right now to bring them out of debt. That's all they talk about. And it makes zero logical sense for them to not try to bring oil and bonds down right now. Meeting Monday, Trump changes to economic D-Day instead of economic fury about freaking bombing them, whatever they're doing. And they understand this is their main concern. They understand Monday's meeting, if they don't come off bullish, and if they don't come off like, hey, we're lowering oil, we're doing this, we're doing that, this is going to be, this is going to cause this effect in the market, this and that. They understand if they don't do that, nothing's going to change. I think they're going to come out very bullish. I think they're going to explain all this very well for the consumer. And I think it is going to be a bullish week, in my opinion. But we will see. I've been wrong before. So we will see. That is my outlook, guys, for what's going on right now. And again, do your own research. Look into all this stuff. Guys, look up something like when you look up something on Google like this. You look this up and you start chatting with this AI. I really like specifically this AI. This isn't specifically Gemini. This is kind of Google's search AI. And what it's doing is every single thing it's looking up, it is pulling from newsletters. It is pulling from newsletters. It's pulling from newsletters. Whereas not a lot of AIs are doing that. And do your research. Look into this stuff. We have AI. We have all the information literally at our fingertips for this stuff. For you to strip away all of the noise, all of the videos you see on Instagram, all the videos you see on Twitter about this is the end of the world, this is bearish, this and that. If you just strip away everything and just look at the raw data, what's going on right now, you can build a case. And there is nothing right now pointing to we're entering a recession and this is all over. And, the AI has officially, the demand has officially met the supply. Everything's pointing at the demand is more than the people even think. Just like we had NVIDIA raise its prices. It does not raise its prices unless the demand is absolutely outrageous. And it is. And it's still going under people's heads, in my opinion. So, that is my case. Appreciate you guys for watching. If you have any questions, if you enjoyed this video, if you enjoyed this breakdown and you learned something, please let me know in the comments. I will make more videos like this. If there's anything specific you want me to go over, let me know. I'll make another video. And that is my outlook for the week. And that's the important things to happen. Do I know what's going to happen Monday? Of course not. But those are what I'm betting on. That is what I think the steps we're going to go towards is just the main thing is just lowering bonds and lowering oil ASAP. So yeah, that's pretty much it. And I will see you guys on the next one. Peace.